Right now in the market, we saw mortgage rates kind of across the board. Didn't matter if it's a 30-year conventional loan, FHA, VA, other than ARMs, rates across the board were pretty much down. If you go over to the stock market, you had a complete rally there as well. We have the S&P just hit a record high, and the indices across the board are all in the green. So what's causing all this? Well, if you go to the headlines, well, President Trump is also on his warpath against Federal Chairman Powell. That continues, and the Treasury market had a fantastic month last month because a lot of people weren't thinking foreign investors would continue to buy our bonds. And they are. And that's one of the things helping mortgage rates in the stock market today. So let's get over to what we can focus in on today so I can give you some direction on what's going on with these things over through here. So the economic news we have the rest of the week. Well, tomorrow we're going to get the JOLTS index. That gives us how many job openings there are. And also some manufacturing numbers. I don't think any of these are really going to come in off charts that would really move the markets tomorrow. So I'm not thinking that there's going to be any changes here. Then Wednesday we have the ADP payroll numbers. I don't think the markets are going to trade on that as either unless there's a big miss here. And look at the numbers last time. Last time ADP had, they thought they came out with 37,000 new jobs were going to be created. This time they're saying 105. Well, this thing could come in at 30 or it can come in at 200. Who knows when it comes to ADP? So we'll figure out that. We'll look at that when it comes on Wednesday. But if this is a market mover, I'm going to scratch my head because their numbers lately have been dismal. But then on Thursday, here's when we're going to get the data that we really need to fill in the void of what the Federal Reserve's monitoring. Okay, they want to see at this point, they want to see how the jobs market's doing. So on Thursday, we have basically, this numbers would have come out on Friday, but we have Independence Day on Friday. So what we're going to get is the unemployment rate. This is the main number that fills in the void of what the Federal Reserve has been monitoring lately. We're going to get initial jobless claims, average hour earnings, and a lot of information that's going to give us information on the jobs market. And that's very important because if the job market is staying steady as it is, well, the Federal Reserve might continue to sit back and say, well, we might not do anything, and that's going to drive President Trump crazy. But if you start seeing the unemployment rate ticking up a little bit, that'll be the last catalyst for the Federal Reserve to come in and say, okay, guys, we're done. We'll start cutting rates. So that's what the markets are poised to watch. It might be a volatile week because a lot of traders might be out of town for the holiday weekend or the holiday that we have on Friday. So we're going to see how this goes. So tune in every day. And the best way to do this, if you're trying to figure out what's going on with these things over here, just watch my videos each morning, maybe 5 or 6 minutes, the morning, the opening bell and the closing bell, and you'll get all the information you need to figure out what's going on with these things over here. So that's the economic news we have for the week. Let's get over to here. Here's what the bond market did today. So you guys, to help you understand the bond market and where interest rates are going, if you don't have access to the MBS market, let's just say you can't come to my channel and you're just dabbling online.